Okay, I'm going to walk through a master budget so you can go back to this and kind of look at it. But please have this make sense. Don't. I've had students in the past to get confused because somebody shows it horizontally instead of vertically. Remember, this is cost accounting, so it's internal. So what it looks like is kind of up to you, as long as it is easy to follow and makes sense. So what we're basically going to do in a master budget is, let me see if I can get my Excel sheet here. Before we do that, I'm going to go over here, and we basically have an income statement. It's the sales minus cost of goods sold. It gives us gross profit minus operating expenses. Gives you operating income. Okay? And so basically what we have in a income statement is we want to have our budget kind of align with this. So in the end, our whole goal is to have a pro forma income statement, or what is our income statement going to look like next year. So basically what happens is the first budget we're going to do is a sales budget. The second budget we're going to do is the production budget. Okay, the third, and notice what goes into cost of goods sold is direct materials, direct labor, and manufacturing overhead. So we do a production budget. I intentionally put it on this side because we don't have a dollar number for a production budget. But the production budget is going to govern the direct materials, direct labor, and manufacturing overhead budget. So basically, again, this is just something I've made up. It's not really an order that you have to do it. The 3, 4th, and 5th budget are direct materials, direct labor, and manufacturing overhead. Then we're going to have our operating expense budget. And then we're going to have the 9th budget is going to be the cash budget. And then we have to have a budget, and I'm going to call it the 7th budget. The 7th budget is going to convert these sales to cash, because sales are sometimes on account. So this is on the accrual method of accounting. And I need to get it to cash. And then the 8th budget is going to be a budget to convert all of these costs to cash. So again, this doesn't necessarily have to be on the cash method of accounting, but I can convert it. So I'm going to kind of delete that for now. So basically we have 10 budgets. In this particular problem, we might throw a few more in there because they do some work to get the overhead allocations. But what we're going to do first is the sales budget. So the sales budget is pretty simple. So please don't make the sales budget more than it is. Basically, the sales budget looks like this. How many units am I going to sell? Okay, so if I'm going to sell 10 items, I'm going to charge $5 a piece for them. And that means my sales are $50. That's a sales budget. Okay, so I'm going to show you their solution. I may come back to this or not, but hopefully you can set up your own as you go along. It's a lot easier if you set it up in Excel. So this problem is long. I'm going over here. You can see we've got a lot of information, and it says we're going to prepare revenues budget, but then we're going to have an allocation rate for marketing costs. That's going to pull into this operating expense budgets, because if you recall, selling and administrative go in here. Okay. So they're getting allocation rates. We're going to get allocation rates for overhead. We're going to get allocation rates for selling and administrative, because it's not like direct materials that goes directly into the product. Okay, so then we're going to find the budgeted number of deliveries and allocation rate for distribution costs. So distribution costs are selling costs. So we're going to have base it based on this revenues budget. Then we're going to do a production budget. So notice that's our second one, production budget. And then we're going to also have some overhead items. So we use the sales budget to get overhead items for selling costs. We also use the sales budget or revenue budget to get an allocation for administrative costs. You don't have to do this. Basically, how you figure that. These are given in the problem. Then we're going to use our production budget to figure out our manufacturing overhead allocation rates. So you can see that that looks budgeted, setup hours, etc., etc. Okay, then we're going to do our direct materials usage budget and the direct materials purchases budget. We tend to not have inventories of overhead and direct labor, but there's two of these, usage and purchases. Okay, and again, then I'm going to use that one to do overhead. So we've got lots of overhead here. Again, we have setups as overhead, processing costs are overhead, so inspection costs. So it might do a good job over here, you know, if I just kept track of my overhead items, and I've got my selling and administrative over items also. So in selling and administrative, we're going to have marketing, and we're going to have deliveries. And for manufacturing overhead, we're going to have setup costs. We're going to have processing. We're going to have inspection. Okay, use direct material budget, so we're going to have material handling. And then we're going to have direct labor cost budget. So again, they're just throwing in these overhead computations as we go along when we're doing, remember we have estimated overhead divided by the estimated base. When the base has something to do with a different budget, we're doing that one. Prepare the manufacturing overhead budget for material handling, setup, and inspection. Material handling, setup, and inspection. Prepare the budgeted cost of units and finished goods inventory and ending inventory, cost of goods sold, overhead budgets for marketing and distribution. That's right here. I don't know what really happened to processing here. Must be in here someplace. I've either missed it or it's part of another budget. Okay. But anyway, so as we go through these, notice we've got several overhead items, a couple of administrative costs we're going to plug into there. So here's the solution. I'm not going to do it on Excel because it would just take quite a long time to do all of this all on Excel when it's already done for me. So again, I set it up usually vertically on Excel like I did before. Hopefully you'll have an Excel tab open or kind of working on it. But the revenues is just the number of units times the selling price. So I have to sift through all of this data here to figure out the number of units times the selling price. And I've put little numbers so I can find them quickly. I've already searched for them and found them. You're just going to have to deal with it and find them. So I'm looking for units sold and selling price, and I find it in number 4. So I have units sold 14, 12, and 14, and my selling price is 9 and 30. So total revenues 108,000 in combs, 420,000 in brushes, 528,000. I'm done. That's it. That's all there is to the sales budget. And then the second question, I'm going to go back and forth here. Use the revenue budget to find the budgeted allocation rate for marketing costs. Okay, so I'm going to have to go through here, and notice in 4 it doesn't tell me anything about marketing costs. So I'm going to have to search through the problem, then figure out about marketing costs, and I've written it down here. I found it. And it says that we have marketing costs $21,150, and we have $90,000 of fixed, and we've already said that it's going to be we need to do it based on the revenues budget. So I'm going to use the revenues budget to find the budgeted allocation overhead rate for marketing costs. So I really wish they would have said marketing costs are allocated based on revenues. But anyway, so I have my marketing costs of $111,150. So my estimated overhead divided by my estimated base, which is revenues, will give us 21 cents or 21.2105 per sales dollar. Make sure you write that per sales dollar. And again, it says use the revenue budgets. I would have worded it as marketing costs are allocated per sales dollar. And then we're going to find the budgeted number of deliveries and the allocation rate for distribution costs. So I go up here and I find my distribution costs are 0 plus 11,700. Oh, there it is. I'm sorry, guys. Right there is our sales revenue. So I divide that by sales revenue, and I divide this by number of deliveries. Okay, so now I have to go look for the number of deliveries. So I've got my numerator, 0 plus 11,700. So again, estimated overhead divided by estimated base. And so now I'm searching for my number of deliveries. And it says delivery truck transport units sold in delivery sales of 1,000 combs or 1,000 brushes. So I have 12,000 units divided by 1,000 at a time. So I have 12 deliveries. 14,000 units divided by 1,000 at a time is 14 deliveries. So I have 26 deliveries. So I have $45 per delivery. So I'm basically done with 1 and 2. Again, this is the important budget right here. These are going to be used later on when I get to selling and administrative. Okay, the third budget I'm going to do is production. Pause this a second. Okay, so now we're going to do the production budget. This is what my sales budget would have looked like. I tend to do them vertically. They tend to do them horizontally. Do them however you want. But if you think about it, the question is, I want how many I'm going to produce. And so I would suggest that you always do them in dollars. I'm not going to fix my decimal points right now. I would kind of probably get rid of decimal points in a budget, because a budget is, let's go the wrong way on that. A budget is an estimate. So like when you put decimal points and cents in a budget, is sort of misleading that it's pretty exact when it's not. So hopefully you would think, all right, if I am going to sell this, I need to produce. So production is going to start with sales. Okay, so please don't do something silly and sell dollars. That's counterfeiting, that's illegal. You don't produce dollars, you produce the units. So in this case, I'm going to sell 12,000 combs. I should have headings, but I'm trying to do this quickly. Okay, so that's what I'm going to do, is I'm going to produce these. Now think about it. Let's say this is monthly production. This is for the year, but let's say we can go with the year. But let's say I produce 12,000 combs and I sell exactly 12,000 combs. So my problem is, on January 1st, when I open up the store, I have no combs to sell. So I want to sell some extra combs. So I'm going to add ending inventory. So think about ending inventory as how much you want left over. All right, so I'm going to produce 12,000 plus some amount I want left over. So I'm going to add that. However, let's pretend there's 1,000 left over, which, by the way, I just made that up. So don't say that's right. Just please use the right number. Okay, which we'll get to in a second. Okay, and so I'm going to produce that, but notice I've already made 1,000 of these 14,000 combs. So if I've already made them, I don't want to make them again. So I need to subtract beginning inventory because it's already made. So ending inventory becomes beginning inventory. Okay, so the setup for this thing is basically sales, add ending inventory, subtract beginning inventory, and that's my production. So if beginning inventory was 500, I'd need to produce 12,500. So I'm going to make what I sell, add some extra, but I don't need to remake them if I've already made them, and I get my ending. So let's go to their solution. I'll pause it here a second. So here's how we're setting it up. Again, they do combs and brushes, so I probably would have put sales in the same columns, but I have sales of 12,000, 14,000 from the sales budget. Units, not dollars, guys. You're not producing dollars. Add your targeted finished goods inventory. Sometimes you'll be told a computation of like 10% of next month's sales or 10% of next month's production or something like that. So I add ending inventory, and if I go over here, targeted ending inventory is 12,014. That gives me my units I need, but if I've already got them sitting around, I don't have to remake them. So I have beginning inventory of 600 and 1,200. And so my units of finished goods to produce is this. And this is pretty important that you understand this is finished goods. because later on I'm going to be using raw materials. But right now it's finished goods, so I have a total of 26,800 units, which are 12.6 combs, 14.2. So this is really one of the very few budgets that doesn't end up in dollars. Okay, so the next question said, so that's my production budget, and then it says, use the production budget to find the budgeted number of setups and setup hours and the allocation rate for setup costs. So again, I need to figure out my setups. Find that back there. So I go back to 6 and I see setup costs are $10,245 and $16,650. And they're allocated based on setup hours. So I'm going to go here and I've got $10,245 plus $16,650. So I've got a total machine setup of $26,895. Now I've got to allocate those based on setup hours. So now I have to find the setup hours. Okay, and again, this is, I had to read through this thing several times to find all this information. But combs are manufactured in batches of 200 and brushes are manufactured in batches of 100. It takes 20 minutes to set up for a batch of combs and 1 hour to set up for a batch of brushes. Okay, so there's 200 in each batch and 100 in each batch. So I have my 12,600 that I have units to be produced from my production budget right there. And I'm going to make them 200 at a time, so I need 63 setups. And each setup takes 20 minutes, which is a third of an hour, so 20 over 60. That might be a bit easier to remember. 20 over 60 for a portion of an hour. And then I have 21 setup hours, whereas the brushes are manufactured in 100, so I have 142, and it says it takes 1 hour, so I have 142 setup hours. Okay, so my machine allocation rate is 21 plus 142 is 163, so estimated overhead 26,895 divided by estimated setup hours 163 equals 165 per setup. The next question. Find the budgeted, says find the budgeted number of setups and setup hours and the allocation rate. We got that. Find the budgeted total machine hours and the allocation rate for processing costs. So I go up here and my processing costs are 11,640 and 30,000. 11,640 and 30,000. So that equals 41,620, and I'm going to allocate it based on machine hours. So I need to know how many machine hours the combs used and how many machine hours the brushes used. So again, I've searched through it and found the information because it's all over the place in this thing. And again, it's just on 2 pages, so you can do it. It's just, you have to kind of comb through it as you go. So I have, again, I'm producing, notice all these are based on production because overhead is based on production, not sales. So 12,114.2 times my 0.25 machine hours and my 1 machine hour for brushes. So I have 315 machine hours, 1420, 1735. So estimated overhead, 41,640 divided by estimated base is 24 per machine hour. So probably a good thing to do, since this is very wordy, is to go over to that Excel spreadsheet I had where I'd listed all the overhead items. And basically say the setup is so much per machine hour, so much per whatever in the heck it is. So it's probably good to get rid of all the words and to kind of put them right in here. So I've got these numbers set up already over there on the other sheet. So I would make sure I would have this heading called manufacturing overhead, setup, whatever it is per the allocation base, process, inspection, materials handling. And I think I'm going to end up without one of these. Okay, let me pause this. Okay, so we have machine setup is 165 per setup hour, and we have processing is 24 per machine hour. Okay, so hopefully you have that right. Already down. Okay, and the next one, we're going to find the budgeted units produced and the allocation rate for inspection costs. So let's go back up here. inspection 10,500 plus 1560 for 12,060, and it's allocated based on the number of units produced. Well, that one's at least an easy one. So I got 12,000, 1,614.2 for a total units produced of 26,800. So now I have 45 cents per unit. So go ahead and write that on your overhead page. Okay, looks like we have that done. Prepare a direct material usage budget and the direct materials purchase budget in both units and dollars, round to whole dollars. Okay, so this is theirs. Again, I probably would make it vertically, but I'm just going to kind of go through. We have 12,600 and 14,000 combs. These comes from your production budget. So hopefully you're writing all these out, but because you won't remember it unless you write it out. But 12 and 14 too. Okay, and then I want materials. So look at the things. It's how much materials are used. So I need to know what in the heck goes into a comb. Okay, so again, I got to search through these. And it looks like my combs have 5 ounces of plastic and my brushes have 8 ounces of plastic. And my brushes have 16 bunches of bristles. So I have plastic. Oops, let's go up here. 12,600 combs times 5 ounces of plastic and 0 bunches is 63,000 ounces of plastic. And I have 14,200 combs in my production times 8 ounces of plastic. So that's 1,336. I would have probably put these separately, but anyway. And so 14.2 times 16 bunches is 227, 200 bunches. Now I need to get my cost. So I have my cost is plastic, 30 cents per ounce. So I have a total 176,600 ounces times 32 cents per ounce. Will give me how much plastic, but just a second. I'm going to actually set this up just a second. Okay, so I'm going to go through this again. I can't remember where I paused. I had to quit for a second. Okay, so this is I was thinking we were doing this down here, which I'm going to go back to in a second. But they want basically the cost of this, how much. I wish they would call this available. But this is basically beginning inventory plus what we purchased. So we have beginning inventory. Pause it again. So we have beginning inventory right here, 456, 1419, plus what we purchased. And what we purchased was, or we needed 176,600 minus the 1,600 ounces in beginning inventory times 30 cents an ounce. So this is what we purchased this period. So our total purchases were beginning inventory plus what we added. And the same thing for our bristles, beginning inventory 1419 plus what we added. And we needed 227, 200 bunches, but we had 1820 already in stock. And it's 75 cents a bunch. It must be in one right here. So again, see how everything is all over the place. So if you take it slow, you can find it. So I think this is direct materials available this period. Beginning inventory. Okay, so now we need our direct materials purchases budget. And if you recall from our direct materials, our production budget, okay, we had, you can see that, we basically had how much we're going to sell. We added ending inventory, subtracted beginning inventory, so we needed to make what we sold. We needed some extra left over, but if it was already there, we didn't need to make it. So we're basically going to do the same thing with our direct materials purchases budget. So this is, notice this is production, 12,600. I need ounces, 5 ounces each one. I've already talked about that, so we're just going to do the plastic. So my total ounces needed are 63,000. However, I need to add ending inventory because I want some left over, but I have to subtract beginning inventory because if it's already there, I don't need to buy it again. So notice 176,600, that's this, which is simply the 5 ounces times the number of combs and 8 ounces times the number of brushes. And for the bristles, 227, I add ending inventory, 1766, 2274, subtract beginning inventory, 16, 18, 20, and I get my purchases to be made. Okay, so notice that this is how much is purchased, whereas this is how much is used. Okay, but available is a better word for it. So my cost is 1776 times 30 ounces of 53,050, and my bristles 227 times 75 cents, etc. So notice that the amount of bristles purchased is different from the amount of bristles used because of inventories. Okay, next one, where am I at? That's the usage budget and purchases budget. Use the direct material usage budget to find the overhead allocation rate for materials handling costs. So let's go up here and find out how much of materials handling is, and I believe that was in number 6. So materials handling is 17235 and 2250, and we're going to allocate it based on the number of ounces of plastic used. Thus, why we did it here. So I have my two costs, just estimated overhead is 39,735 divided by your estimated ounces of plastic used, not purchased. I would have grabbed that one, but I want used, so I have 176,600. So I get 0.225 per ounces of plastic. And used does make sense simply because it's production, and so I want it based on production of plastic used, not plastic purchased, but that one was closest, so I about made the mistake of doing that. Okay, so again, now go to your overhead allocation rate and write a 0.225 per ounces of plastic. So hopefully you have 3 or 4 lines of your overhead all done, and so they're kind of not all mixed up in here. Okay, so next one tells me to do our direct manufacturing labor. So if you think about labor, you're going to ask yourself 2 questions. And please write these down and think about them before. How many hours is it going to take to make each one, and what am I paying people per hour? So notice I'm starting with production, not sales, production. So you can go up to your production budget. Again, hopefully you're writing these down. And I'm going to take it times, I can get to it, times how long it takes me to make them, and what is my wage rate. So I go to my second one, and it tells me it takes 0.05 hours and 0.2, and my wage rate is $18 per hour. So again, finding it is half the battle. So my total labor costs are $11,340 and $51,120. And again, I probably would have done this vertically and kept combs in one column and brushes in another one. The next budget, so if you think about your the budgets, hopefully you wrote this out, but sales, I've done that. Cost of goods sold has the production budget, done that. Direct materials, direct labor, I've done both of those. And now I have the overhead budget, okay? And let me back up a second. Direct materials might have more than one. We had the used and purchases budget, simply because your direct materials, you do inventory, so you're going to have different materials purchased and used. All right, so now I have my overhead cost budget, and remember, we figured out all of those allocation rates that I hope you wrote out, but materials handling is allocated based on plastic used, so that was 0.225. And so, okay, so we're going to go to the overhead budget, and you can see that they just took these numbers, 17, straight from over here. So again, hopefully you have this in front of you because these numbers are a little bit small. But all of these are for overhead. and all of these are fixed, so they're just coming straight from there. The ninth thing that they ask us to do is prepare a unit cost of ending finished goods inventory, and ending, etc. So we're going to basically do a unit cost, and so we're going to go through each of these and notice that our plastic was 30 cents per ounce, and we need 5 ounces per brush. So we have $1.50 worth plastic, and for the combs, for combs, and 8 ounces for brushes, so we have 240. And you could probably have done this by taking some cost divided by the total, but since they did it this way, we will. And sometimes if you take the total divided by the total cost divided by the units, sometimes with the inventories, it can kind of mess you up. So anyway, so then we have bristles. So remember, direct materials, direct labor, and overhead. And our overhead, we have 4 overheads. So we have bristles of 75 per bunch with no bunches, so there's no bristles, but 75% and 16 bunches here, so $12 worth of bristles. Direct labor is 18 hours for 0.05 hours, so 90 cents worth of labor, and we have 0.2 hours times 18, so we have 360. Now we're going to get our materials handling, and this is our ratios that hopefully you've set them up, but I just wrote them all here, so you probably have already written these out. But it was 0.225 based on the ounces of plastic, and so I have 0.225 times 5 ounces of plastic, and the other one used 8 ounces of plastic, so we have $1.80. Machine setup was 165 based on setup hours, and the number of setup hours, we needed to figure it out per item, so per brush or per comb, and so we had 21 setup hours divided by the 12,600 units is 0.001667. That was right. Based on setup hours. Yeah, as you can tell, there's just things all over the place here. Okay, and we computed the setup hours. Takes 20 minutes to set up a batch for combs, etc., etc. So go look at your formulas and computations for the setup hours. We've already done that. But anyway, so each one, and for the brushes, 142 setup hours divided by the 14,200 brushes is 0.1. So I get $1.65. Processing is 24 per machine hour, so I have 0.25 machine hours for this one. In here, and there. And one, and inspection is 45 based on the units. So I have 1 unit, so 0.45. So the only one that's kind of weird is the setups, because I have to allocate it between to figure out how much it is per comb or per brush. So basically what I have is $4.85 of direct material, direct labor, and manufacturing overhead. So now I'm going to do my ending inventories budget. I have 2 types of ending inventories. I have finished goods and direct materials. So I am told for my direct materials that I have 1766 of plastic and 2272 of bunches, and my cost per unit is 30 cents an ounce and 75 cents an ounce. So my ending inventory of raw materials is that. Remember, my beginning inventory amounts are given. I think it was right there. 456 for plastic. Here's my ending inventory for plastic. My beginning inventory for bristles, my ending inventory for bristles. Finished goods. Finished goods, I have combs. This is from my, up here, my production budget. Finished goods is 600 for combs and 1200 for brushes. pause that. I picked up the wrong number someplace. Let's point to the right one. I want ending inventory. I picked up beginning inventory. Ending inventory is 1,200 and 1,400, and your production budget, I pointed to those. Read it too quick. And I have 1,200 and 1,400, and I use my 485 and 2430. And so I have my ending inventory for finished goods. So now we're going to do a cost of goods sold one. So I have beginning finished goods inventory of combs and brushes. Okay, and my beginning inventory is from right here, 2,700 and 27,180, plus direct materials used. You can pick that up from requirement 5. You can scroll up. Direct labor is your direct labor budget. Manufacturing overhead, you can check number 8 for your overhead budget. Gives you cost of goods manufactured, that's just a subtotal. Minus ending inventory, which is right there, gives us cost of goods sold. Then we use our marketing and distribution costs. So we just, again, just like we did for the other ones, we just pull them over, 21 and 90. Okay, and 1170 for distribution, so that's just coming straight from there. So my income statement is revenue. If you scroll up, you'll get your revenue budget. Hopefully you've written these down. 528. Cost of goods sold from your cost of goods sold budget. Operating non-manufacturing costs right there gives you your operating income. So you can see that kind of takes a long time. Probably if you would kind of just set up your budgets how they go and work through it, looking for the information might take a little less, but their organization's a little bit off. So hope that helps.